Hey, hey, go, payday, go. Niggas say I rap, but I don't rap, I sort of flow. Mama told me independence, I'm always on go. Slide down your block, we empty clips, that's how it go. If you talking, you gon' walk it, you don't want no smoke.
What's up, family? It's Smart Money Go. We are back with another video. I just want to go over a really quick strategy for you guys. I get a lot of DMs and stuff, comments and stuff, to go over how I trade. I'm more so trading the higher time frame, mid time frame now. I don't really go to the 1 minute anymore, just because it gives a lot of emotional stress. So I want to show you guys a simple strategy that you could use on the 15 or 1 hour, sometimes on a 5 minute to get entries. I learned this from Phantom, a little bit of ICT blended with these things, Smart Money Concepts. So real quick, let's just get straight into it. So first of all, we want to look at this area, right? And we want to consider this left side right here. So we just look at this left side right here, right? We see that probably some liquidity was exercised right here to the left or so. We swept that liquidity and then we get an abrupt movement to the upside, right? So when we get that abrupt movement to the upside, what we want to look at and recognize is the fact that we can't really, this is usually not this is just an impulsive move. Like we don't get pullbacks, we don't get a lot of these things during this movement. So most of the time when this does happen, banks or whoever, are trying to get to a key level, right? So let's say a supply level, a key supply level, and we start to give reactions off of that level. And eventually a lot of people, this is liquidity in itself, right? So a lot of people will see this big movement and try to take buys back up. Now, sometimes you will get a pullback to the 50% or so, or above the 50%, because there's enough buyers there and to take out the high within that key level. But what we'll get is a sweep of liquidity and then a break of demand, right? Once you get that break of demand, now I'm officially bearish, and this low means nothing to me. Now, I will keep an eye on this. So my first target, if I was to get in some sales, would be this level here, because we know that this level can give us a key reaction, a key area where price could just start to give us a pure pullback, a deep pullback, or a complete reversal, right? Now, we want to understand in this area also over here is that there's no point of resistance, really. You know what I mean? And I'm not talking necessarily support and resistance, but you can't think of it in that way, where this is just an impulse. It's about probably 2 candles, 1 candle, 3 candles, something like that. There's no true resistance like we have on this left side, this right side of the chart, right? So if we wanted to catch a reversal over this way, we have to go through this high, this high, this high, this high, this high, and this high to actually take out anything, right? So this right here is what we want to trade. We want to feel comfortable trading from these protected levels, so to speak, because they can get swept. You can look at this as trend line liquidity here, trend line liquidity here, right? But these levels have peaks, they have highs that sweep liquidity and then they push down, breaking some form of demand, or vice versa, some form of supply after we take a low. And that shows protection in the market, right? So what these levels is, as you can see here, we get this right here, this push up, and then we get the break of demand. Now, a lot of people will call this a chalk. Same thing, it doesn't matter. It's a chalk, right? We get a push up, we get a reaction from that demand. We push up, take that high, and then we take a low. Immediately, when you see a high taken abruptly or a low taken abruptly, but in this case, we have a high taken, and then we take a low immediately, we want to trade from those levels, right? So you want to find a level that looks nice, a candle, something area that looks nice to you, and you want to get in the market. Really, really simple and easy, right? 15-minute, it happens 4 or 5 times a week. I've done the data, I've back tested it 4 to 5 times a week. I trade only GU, and this happens about 4 to 5 times a week. Sometimes 3, sometimes 6, right? But we want to look for these levels. These are clean levels, protected levels most of the time, and they are to be used, right? So in this sense right here too, you get a high. Once we break that level, a lot of people will enter here, right? They want to get in early sellers. They put their stop here or something like that. They want to get it, protect it. Sometimes what will happen is you'll get the nice reaction, but it doesn't break demand. So we know this high becomes liquidity. They try to go break even too soon, then it comes, takes them out, and then it continues that move along the way, right? So this is why we want to try to always take the extreme, depending on the pair. Do you collect data and figure out what your pair does? But for this level here, it has a level here that has swept liquidity to the left, that has broken this demand right here, right? That was created in the market, and it's nice pushback. We take a high, we take a low abruptly, we come back to this level, we create some structural liquidity, and then we come sweep that level out, and we use that liquidity that bought buyers in, early sellers in, and we push it down. Even people who got in here went break even. We come back, tag them out also. So it's a bunch of liquidity being monitored and exercised at these levels, and we want to get in at these levels. The same thing here. Say we couldn't catch this and we come to the market, start session, we get a high, we get a tap into this demand. So now we're waiting for a reaction, right? We get a reaction from this demand. Again, this level probably swept a candle's high to the left or something, right? So in that event, you can assume that once this comes here, we take this demand. Now you can enter here, but we never know that this demand, give us another reaction to continue to push up, right? So unless we see this level sweep some pair liquidity, which we can't see here, we want to let this demand fail, right? Once this demand fails, right? Once this demand fails here, this entire move right here, we get a chain, right? So 1, 2, we sweep this liquidity. So we know once this demand fails, price will most likely come back to where our level here. So we create some structural liquidity and we pull this back. And we're looking to enter off of this level because it has swept some liquidity. Why? It gave us a reaction from demand. Demand tried to stay in control. It couldn't, and supply took it clean out. So we take that level, we come here, and then we get our big push to the downside, right? So I'm going to show you a really quick example of that in real time. And then I just really want you guys to go back, look at this, test it. And it happens consistently. Last week was a beautiful week of this happening. So look at what we get, right? We get our nice sweep of liquidity, our nice demand, right? Our nice demand level right here. Now, I usually refine this to the wick or something like that, but right here, we just take the range just to keep it simple. Now, what do we get? We get a nice push up into the supply. We get a pullback. We take the highs, right? When we take the highs, we really want this low to get taken, right? So when this low gets taken right here, ever so slightly, we want to build our levels which swept liquidity. So for example, this level has swept liquidity right here. Now, this level swept liquidity, but it didn't abruptly take the low. So we just map out this level of supply because this is where our move originated from, right? And then this move right here, this high actually pushed down, tapped into this. We came up reactive from this demand. And then from that reaction, right, what do we get? A nice sweep of these highs right here that was exercise liquidity on the lower time frame. And from that sweep, what do we get? A push, and we break this low slightly. Me, I actually take wick breaks. I've back tested this. A lot of people want body breaks, but I've taken wick breaks. And if if you want to be technical, this body here closed below, but it wasn't really like, strong in conviction. So a lot of people wouldn't take that. Me, when I see any side fell and it feels good, if this was an impulse sweep and then go this way, I wouldn't have taken it, right? But because this level took a low and then it started to chop back, this was our last level. Remember, we spoke about it. I think I deleted it up here. But remember, we see this level, right? We see it push down. We see it sweep. We break. So let's go back to our area. So when we come back to this level, once we get that sweep, we just map out this level here. Me, I usually take a candle, right? Now look at how perfectly this lines up. New York session comes. You set a limit there. You don't even have to pay attention. You can put your stop here. You can put your stop here. It does not matter. This is our chain now, right? This is our mitigation. We should respect these highs, right? These highs should be respected because they swept liquidity, gave us an abrupt movement, right? We can target this low, nice 1 or 2, beautiful, get out the market, or target this range of demand, right? Again, same thing here. We get an impulse move to the downside, price, some demand steps in the market. So price comes, nice demand steps in the market. Oops, let's get this going, guys. When this demand steps in the market, all we want to do is wait for it to fail, right? What happens? We come here, we sweep a nice high, a bunch of highs actually. Sweep a nice high here. Candle highs are liquidity, right? In my opinion. We come here, we take this level, right? Now we do hit this level during Asia. So if you trade Asia, this is a beautiful setup. But I don't trade Asia, I trade New York. So I want to follow my chain mitigation. So if this level took out the last level of supply or demand, right? You want to, okay, well, we have some structural liquidity here that we took out with this high. right? We took out this level of demand right here. We got some nice liquidity residing here, right? Some old highs, and we have a structural high right here, right? So what I would do is simply I would place a limit on this level here. The reason I would place it here, I wouldn't put my stop up here. The reason why I would place this level here is because if we look at these candles, I can go to the 5-minute, but we have a nice abrupt movement. We have a down candle. Then this candle here gives us a reaction to this demand. And after that reaction, this candle goes down and it breaks eventually. So this level here, I know that something happened on this candle, so I want to be able to include this candle. Even if you included it here, right, and you got tagged in here, that's fine also, right? But I always take the bodies most of the time. If it's clean and nice with an empty wick and an imbalance, I'll take the wick also. But this case, I'll just take the bodies just because it's all scrunched up. We get tagged in, and now where's our technically, if we go to the higher time frame, our target really should be this low now. This supply is completely in control, guys. So we shouldn't have to worry about this demand necessarily giving us a huge reaction. You see, this demand actually helps us get back in the market. This fails, we come back up here, this fails. You know what I mean? All we have right now is sweeps of liquidity. We're continuously sweeping liquidity. Eventually, now it goes to the opposite side. And, we, right now the market is, doing whatever. But in this scenario, this is optimal to trade. If you see these chains forming, if you see these liquidity sweeps, breaks of demand, breaks of supplies, feel free to take that risk entry, get in the market, and just aim for the nearest weak low, the nearest demand level, whatever you like to target, liquidity, which I love to target. Aim for those levels and you'll be fine, guys. So I really hope this works. Let me know in the comments what you think about the video. I'm going to definitely be dropping more content, so make sure you hit that subscribe button, turn on post notifications, and please like the video. As always, if you found something valuable, if you learned something, if you figured out something that could help you in your trading, please like the video, share the video. I appreciate y'all. SMG, let's get it.
Slide down your block, we empty clips, that's how it go. If you talk it, you gon' walk it, you don't want no smoke, yeah you know, I know, you don't want no smoke, yeah you know, I know, you don't want no smoke, yeah you know, I know.